Good morning and welcome to Top of the Morning by Mint, your daily shot of sharp business intel, global trends, and market movers. It's Monday, July 21st. I'm Nelson John. Earnings are pouring in, sanctions are flying, and one of India's top crypto platforms just got hit for $44 million. From boardrooms to backchannels, it's a week loaded with action. This is Top of the Morning. The Q1 FY26 season is officially underway, and this week promises to be a blockbuster. After Reliance Industries and HDFC Bank kicked things off with their June quarter results, over 95 companies are now set to unveil their numbers this week, including tech giants, pharma majors, and financial heavyweights. All eyes will remain on the ongoing earnings season, with a series of major results lined up, said Ajit Mishra, SVP, Research at Religare Broking. Markets will first react to results from Reliance, HDFC Bank and ICICI Bank during early trade hours on Monday. What's ahead? July 22nd will see key updates from Colgate, Palmolive, Dixon Technologies, IRFC, JSW Infrastructure and Paytm. On July 23rd, spotlight shifts to Infosys, Dr. Reddy's, Coforge, Tata Consumer Products and Persistent Systems. July 24th is another packed day with earnings from Bajaj Finance, Canara Bank, Emphasis, Nestle India and SBI Life Insurance. July 25th brings numbers from Cipla, Bajaj Finserv, Bank of Baroda and Shriram Finance. The week wraps on July 26th with Kotak Mahindra Bank, IDFC First Bank and Balkrishna Industries. Analysts say the markets are watching profitability, rural demand trends and margin pressures amid a mixed macro environment. With large caps and mid caps in the spotlight, investor sentiment could swing based on how companies navigate input costs and consumer demand. The earnings rush is on and the street is listening. India's leading crypto exchange, CoinDCX, has confirmed a major security breach, with hackers stealing approximately $44 million from one of its internal accounts over the weekend. In an official statement, co-founder Sumit Gupta said that the breach was due to a sophisticated server attack on an operational account used solely for liquidity provisioning on a partner exchange. He reassured customers that their assets are safe, as the affected account did not store user fund. Losses will be covered entirely from CoinDCX treasury reserves, which are sufficiently healthy, Gupta said on X. Following the breach, the company temporarily paused its Web3 trading services as a precautionary measure, but has since resumed full operations. Crypto trading and INR withdrawals remain unaffected. Gupta urged users not to panic, saying, quote-unquote, "A gentle reminder, don't panic, sell your assets. It often leads to poor prices and unnecessary losses. Let the market settle." CoinDCX is currently working with internal and external cybersecurity teams to investigate the breach, patch vulnerabilities, and trace the movement of stolen assets. The company is also preparing to launch a bug bounty program to help identify security loopholes. This incident adds to growing concerns around cybersecurity and crypto security in India. Just last year, WazirX suffered a similar breach worth over $230 million. The timing is crucial, as India is expected to release its first crypto policy paper later this month, bringing tighter scrutiny on digital asset platforms. Tensions are simmering after the European Union imposed new sanctions on Nayara Energy's 20 million ton refinery in Vadinar, Gujarat, prompting a sharp rebuke from Rosneft, the Russian energy giant and 49% stakeholder in the company. Calling the move unjustified and illegal, Rosneft warned that the sanctions threatened India's energy security and will negatively impact its economy. The Nayara refinery is strategically important for India. These sanctions jeopardize stable fuel supply and economic stability, Rosneft said in a strongly worded statement on Sunday. The EU's new measures, announced Friday, aim to choke off Russian oil revenues amid the war in Ukraine. The bloc has not only targeted Nayara Energy, but also lowered the price cap on Russian crude to $47.6 per barrel, and cracked down on the so-called shadow fleet of tankers. Rosneft, however, distanced itself from the control over Nayara, saying it holds less than 50% stake and that the firm is run by an independent board of directors. Nayara, it added, is an Indian legal entity taxed in India and its profits have been reinvested locally. No dividends have been paid to shareholders. India has also responded. The Ministry of External Affairs stated late Friday that India does not recognize unilateral sanctions and remains committed to meeting its citizens' energy needs. There should be no double standards, especially when it comes to energy trade, said MEA spokesperson Randhir Jaiswal. With 6,500 fuel pumps, Nayara holds India's largest private retail fuel network, making this more than just geopolitics. It's a direct shot at India's energy lifeline. There's a fresh diplomatic flicker in a region clouded by conflict. Iran has agreed in principle to hold nuclear talks with UK, France and Germany, the so-called E3 nations, later this week according to reports from Iran's semi-official Tsunami news agency. The deputy foreign ministers of these four nations are expected to meet on Friday, with discussions set to be independent of Iran's indirect talks with the US. Iran's state-run IRIB confirmed. The E3 are key players in the original 2015 Iran nuclear deal, formerly known as the Joint Comprehensive Plan of Action, JCPOA, a deal the US controversially exited in 2018 under President Trump. Efforts to revive the agreement have been on life support since mid of June, after an Israeli strike on Iran just days before a scheduled sixth round of Oman-mediated talks between Tehran and Washington. Talks between Iran and US remain frozen, with Iran demanding security guarantees following joint US-Israel strikes on its nuclear sites last month. This upcoming E3 Iran agreement offers a potential off-ramp to escalating tensions, but expectations remain low, with both sides entrenched in distrust and geopolitical stakes running high. Still, in a region where diplomacy often dies in silence, even a dialogue is a headline. With just months to go for the January 2026 rollout of mandatory anti-lock brake systems, ABS in all two-wheelers, Honda Motorcycles and Scooters India, HMSI, has raised a red flag, joining its larger peer, Hero MotoCorp, in voicing serious supply-side concerns. Cost is definitely a factor, but the bigger question is, are we really prepared on the supply front, said Yogesh Mathur, Director of Sales and Marketing at HMSI, in a statement to Mints Iron Kartik. Currently, only two-wheelers above 125cc require ABS. But under the proposed norms, 84% of India's two-wheeler market, or over 16 million units, will need to install the safety tech, adding 3,000 to 5,000 rupees per unit in costs. The auto industry is concerned that local suppliers aren't ready. As Mathur pointed out, manufacturers may have to rely on imports to meet the deadline, especially for critical components like electronic control units and wheel speed sensors, 70% of which are still sourced from China and ASEAN countries. Auto Body, SIAM, met with the Union Road Ministry earlier this month, requesting more time. But the ministry has held firm, citing high two-wheeler accident fatalities and the need for urgent technical interventions. Analysts say the domestic ABS market could grow 5x to 80,000 crore rupees, driven by players like Bosch, Continental and Endurance Technologies. Yet full localization may still take 12 to 18 months due to tooling and validation processes. A short-term import surge seems likely, unless the deadline is extended, a move several experts believe is still on the table. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest news. Until then, this is Nelson John signing off. Have a great day.